Hi everyone, this is Cyrus from Live Trade Academy. So today, the 21st of January, Monday, um, 2019. Well, this is the first video that we are going to um, basically analyze the market and then see if there's any opportunity and then take live trades in the market. Well, this is going to be the key concept of this channel and our analysis, our trades, and well, for trades basically there are two parts. One part is analysis and the other part is basically the loyalty, depending on how much money is in the account, and then calculating the risks and potential rewards, and basically taking trades one after another, analyzing them, going through. So it's not mainly gonna be like offline and off the live market trades and analysis. They're all gonna be live. So like, let's get into it basically. So for the first, well, there are basically some other trades actually that has been taken by me and my friend that has been working on the account, but then from today onwards we are implementing this strategy of analysis and trades, and then moving forward we will all see the final outcome. Let's hope for the best. Alright, starting with pound USD cable. So first of all, there's no big calendar news that is basically gonna happen today on Monday 21st. You can go to Forex Factory, or basically there are other sources of fundamental news. It seems that there's not going to be any high impact news on pound, and as well, like, there's bank holiday in the US, the observance of Martin Luther King Day. But tomorrow we have a couple of high and mid impacting news on pound, but not really on the dollar. So like for today and tomorrow, like we're basically we mentioned that we're not scalpers. We're basically intraday traders and going towards like swing trading. So getting started. That was the fundamentals. That were the fundamentals, and then like getting to the technicals basically. For setting up our chart, we start with a normal plain, let's say 5-minute chart, and we are using trend lines in the beginning. Well, one thing to be mentioned is that basically trend lines, unlike many analysts and traders mentioning, are quite useful. It depends on like how we draw them, how we use them. So starting from the highest high that we have in recent price going, drawing up a trend line, downward trend line, as practically the price is coming back down. We are looking for excellent price bounce. Alright. can even increase. Alright, let's get into it. What's going on in the market actually? Alright. So basically that's how I've been drawing a trend line and for years, and I believe it will work depending on how we use them. So a note to mention as well is that I believe market has only three main patterns. One of them is a triangle, okay, that is expanding. Alright, let's get to that as well. A triangle that has been expanding. Triangle expanding from this point onwards. There are millions of examples, hundreds of thousands, countless examples actually to say that the market had three patterns. A triangle that is basically has a starting point and it's expanding, which indicates a new trend in the market is going to start. Alright, depending on which side of the triangle it's basically getting away from, and it will move towards, like, if it doesn't really get to the lower part of the triangle, it will continue moving towards the higher boundary, and by the time it has touched the higher boundary of the triangle, what I've seen most of the time for four times hitting the upper boundary of the triangle or the lower boundary, then only after four times, most of the time, like I could say estimated 95% of the time, after four times hitting one side of the boundary and really expanding a bit further, it will come down and see the other boundary of the triangle. This can happen in quite long-term trends as well. So that was the first one, a triangle that is expanding. The second one is a triangle that is basically closing, the price is closing towards where it wants to, consolidation, sort of consolidation, but then it's not really the type of consolidation like that other analysts and traders mainly mention. But doesn't matter. This, I don't really consider this as a consolidation. Well, in my own method of analysis. Well, we'll get into that and then see where it's gonna go. So the second type, a triangle that is consolidating towards a point in price time, basically. That was the first one. This is the second one. And trend lines, channels of price. So basically these are three patterns that can happen, and they can happen in short term and long term, really long term, and as well really short term price moving dynamics of price and time. Well, we'll go through some aspects of time as well, because basic time analysis is some key important aspect that many analysts they don't really go into it. They only analyze price. But then the level of expertise of someone will be known actually after analyzing, being able to keep like time targets. We'll get into that as well, and the methods, and all of this is going to be basically live, not just like past examples, live trends. So, alright, being more excited than everyone. So, so far we went into like 3 basic patterns that actually govern price action through time, and then even more fundamental than that actually, when you want to have some understanding of price behavior through time. All this basically happens because of one thing, I believe, and that is price through time is moving on the surfaces of big and small ellipses. Big and small ellipses. Let's say, let's create. We're starting with the most fundamental, most basic fundamentals of like price movement. And further on we're going to our analysis section. Well, if we basically pay close attention to price movement in its fundamental parts, basically, we will see that basically either the price is moving like in a curve that is getting the curve is getting sloped out, or it's increasing the slope. So that's it. And then like this, all this is going to be on the surface of ellipses and circles. Circles are some special term for ellipses, but that's it basically. It either slopes, increases, it decreases the slope, so the price is like, have an impulse and then like, have correction, and then it gets to a point basically that it consolidates, and then from there, either it will accelerate down or it will accelerate up. That's it. And then from there, we will go to the ends and U's basically, which is all again on the surface of some other ellipses. And from there, from these 2 key elemental and fundamental points, we get to a triangle. We get to a triangle quite simply. And price either well, this can be redrawn so that yeah, basically price goes out from the triangle. See the first immediate important price resistance comes back into the triangle, out of the triangle, out of the triangle again, and then we will go to the measures as well later on. This can be quite deep, but then we're trying to make it as simple as possible. This distance in pips could be equal this distance. It's like market symmetry, and basically, yeah, it's if the shapes are drawn in a correct manner, then we will see actually symmetry. Moving forward, so a triangle that is making the price consolidate, triangle that is expanding, and trends. So this is also like a small trend that you can see. Pricing. So we are looking for opportunities to trade. If the trend lines that we draw are with good angles, actually, that these good angles means like it is passing in the chart, in the history of the chart, with the law that governs this pair, each and every pair. If there is a law that actually the price moves based on that law time, that law has already been applied to the previous history of the chart, so it is going to show itself again going forward through time. So when we draw trend lines actually that are connecting the dots, connecting the points that actually have been pretty important in the price, those parallels of those lines and an equal distance of those lines, and as well, like, you know, Fibonacci ratios applied from the, let's say, the midline of a price channel. Fibonacci ratios, let's say that this is, considering this one is like 33 pips. Fibonacci ratios like, let's say, 61%, 100%, 127%, 161%, 200%, 261%, and 261% of this, let's say, action reaction that we have in price, 261% is a very, very key line. Let's get into that now. 33. Multiply that. Let's say the first one is the equal one, which is 33 pips higher than this one. Should be around. Should be passing on that point as well. Roughly, I guess it's already price has shown its reaction. There you go. Already have that. And the price is reaching that point again, that trend line again, sloping downwards. getting to 161%. Well, if we practice quite enough, then we can also like visually have this all in our mind. That's why they say like great traders and just look at the chart and then like they will tell you what the price is gonna do without any visual aids that actually are flying on a chart. And here we are not talking about in like Trade Academy, we are not using any indicators except one and only one, and that is going to be ATR, average true range. Except from that, we are not using any indicator in our trader analysis. So that was the second boundary that the price is going to have reaction to, and let's get to 200% as well. Found it, and 268, another very key level that so it's gonna be these numbers are as well quite important. 88, 89, 108. Well, if you dig enough, depending on how you dig actually, but then like you can see traces of this number of 108, 108 in music, in ancient. Well, I don't want to give further info right now, right here, but then 108 is a very fascinating number, and you'll see prices in charts bouncing off from their highest high to their like lowest low in like trends, like intraday trend or like 2 day one. Extremely huge number of times. Just mark this number, 108. 118 as well, but then I'm quite excited about actually where this channel is gonna go to, because actually it's gonna compound the information about many stuff, many big stuff, and well, we'll get to them like one by one. So for today's video, for just now actually, like table, we're waiting for the market reaction to this line, lines that we have already drawn. One thing for now is that basically from top to bottom on top of stuff. That was on. What? Right, 1.5. So we have this one more level of resistance, and the price has not broken above yet. Basically for our trade, the market is okay. Currently going through a very short-term, very like crawling slope of uptrend, as you can see. But then it has not broken this key resistance level. It has not broken by the time, and then as well, this blue trend line coming downwards is going to be a resistance to the price each time it's going to see each of these. So it has not broken above this level, and then that's it for this video. We are waiting, actually, we are waiting for the price to either break this level so we can pick up going long, or breaking below this key support level. And forget about these trades actually. There's not going to be any lies told in this channel and stuff like that. You simply hide the trades. But then, yeah, there were mistakes actually that have been done in trades. And the whole purpose of these reviews and stuff is like getting into the facts and eliminating those mistakes one by one, hopefully. Let's see where it all can be. So basically either break below this level and continuation further down, if the market can't do that, or break above. And let's see. For now, actually, there are no trade suggestions yet, but then we are gonna give trade suggestions, basically, as in a sense of maybe not in a total suggestion, but then like a trade that I'm gonna from now on, like Trade Academy, and we'll see where they're gonna go, basically, with the money management and risk management that is going to be taken into account. And yeah, wishing you all the best. That's it for the first video.